Alright guys, so I hope you're doing fine as always. Today I'm making a video about just Fibonacci retracement, what the levels are and how to use them, or how I personally use it in my trading. So first of all, what is a Fibonacci retracement? The Fibonacci retracement in trading is just a tool to identify potential support and resistance levels during a price movement. So it's nothing more than zones where you can identify a potential bounce of the price. These Fibonacci retracement levels or Fib retracement levels are just based on key Fibonacci ratios, which is based on the Fibonacci sequence. This is just a mathematical sequence of a series of numbers where each number is a sum of the two preceding ones. But that's just the math behind it. So without further ado, let's jump straight into TradingView. Alright guys, so we're now here on TradingView. So first thing first, I will show you where you can find your Fibonacci retracement tool. So first you go here to the left to your tools or wherever you have set them. You go to the second one, click on the arrow, and here you find all your Fibonacci or CAN tools. So we select the retracement one. Can also be found by the hotkey of Alt plus the F key. So we select our Fibonacci retracement tool. It will look something like this, or at least yours won't be looking like this for the first time if you use it. You have to double click your Fibonacci to go to the settings, or you just select here your setting wheel, and then you can customize your style. I do recommend turning off the background, because if it's on, you will have this fog on your chart, which you really don't want. It will make the chart a lot less visible, so I recommend turning it off. So the levels that are most important for your Fibonacci retracement are the 0 level, the 0.382, the 0.5, the 0.618, the 0.65, and your 1 level. So these are the must-have on your Fibonacci retracement. I personally also like to have the 0.86 there, and optional the 0.886, but that's up to you. I do recommend having the 786 there as well though. The other ones that I have unchecked here, you don't have to copy. These are just my levels for harmonic patterns, but that's nothing for this video. So once you have set up your Fibonacci retracement levels correctly and in a style that you like, you can opt to extend the lines to the right, which I personally use because I like to have them extended so I can see my levels clearly on the chart. If you don't like it, just uncheck it and it will stop at the level you want or draw. I have mine extended to the right, so we click on OK. Once you're happy with your setup, it should be looking something like this, or however you have set it up. So now, how do we use this, or what does this mean? Because I can imagine the 382, the 05, the 618, 65, 786. What are these levels? So they might be a bit more intimidating. Cool thing you can do with your Fibonacci is if you double click it again or go to your settings, you can go down here and on the levels tab you can change it to percentage. So now these values are a certain percentage, which makes it a lot more easy to understand in my opinion. Because what are we looking for? We have an initial move up, let's say in this case. This is just a 100% move. So our initial move up, this is a move of 100%, let's say. It doesn't mean price is going up 100%. It means just the move from A to B. that move we call 100%. So that's a full move. So if price retraces into the 382, for example, that means price has retraced 38.2% of the total initial move. So if this is A, we call this B, for example, and then here C, that means the move from B to C equals 38.2% of the move from A to B. So this move, the move from A to B and the move from B to C, are just given in terms of percentage here with your Fib. So of the initial move AB, the correction of B to C was 38.2% of the total move. So these Fibonacci retracements are pretty much nothing more than just a percentage of your total initial move. So just the correction of your initial move. I hope that's somewhat clear. So if it goes to the 50%, that means your B to C move corrected 50% of its total move A to B. It goes to the 618, that means it's 61.8% of the total move got corrected. And it's nothing more than that. So just a percentage of your initial move. So out of all these different levels, the most important one is the 618. Why? This is the golden ratio. It's pretty much based on the Fibonacci sequence itself, the math behind it. I'm not going too deep into it, but this is based off the phi golden ratio, which was based on the golden constant, which is approximately 1.61803 or something in the Fibonacci sequence. But that's not important for us. We just have to know it's our most important level, or the most important Fib level. Does it mean price will bounce or go mostly to the 618 level? No. But what does it mean? It means that in this whole sequence, the 618 level is supposed to be or should be the strongest zone of support. So if the 618 breaks, then we are probably not going to look for some type of reversal, but we want to see a deeper correction. Lately, I've been noticing the 786 is also acting for many coins as some good support, but if they break, chances are pretty big that we will go down lower than our one level and take out the liquidity. Doesn't mean we will be shorting this move, but it means we are not looking for some type of entry based off the Fibonacci retracements. So now, how do we use these? Or maybe first I will say when to expect prices to bounce off which levels. Might be more interesting to look first. So we do have these three zones, 382, 05, and 618. These are the three big zones in our Fibonacci retracement. When we see a very, very strong trend up, there's more chance that we will see some type of reaction at the 382. If the move up is a normal paced trend, we will see this 0.5 usually act up like some type of support. And if we see a weak trend up, so nothing major, just slow and steady move up, our 618 is usually the zone to look for. So now we can have a quick look at these two paths I drew here. So I just drew these to show how we will be using our Fibonacci retracement or how to draw them. So we always draw them with the trend, or as Killian said on the Discord server, we always draw them from left to right. Left to right are always just with the trend. So for example, we do have this uptrend here. So if we look from our starting point, so our initial move up, so from left to right or with the move up, we see we do have the retracement here in our golden pocket. So 618 to 65, this is called the golden pocket. Why? The 618 strongest zone based on the golden ratio of Fib. 605 is just some margin, let's say, so it's just a bit of wiggle room. So this is our strongest form of, or should be our strongest form of support. We can see price retraced back into it. From there, we bounce. So we can consider looking for a long setup in this golden zone. Keep in mind, I personally like a lot more confluence, or I won't set a long entry there. I will wait to see a reaction and another form of confluence, but knowing it bounced there is already a good sign that should ring some bells saying, hey, we might go up a little bit more. So we do go up from there. Let's see, then we make a new move. So another move up. Again, from bottom to top or from left to right with the trend. Here we retrace into the 0.5, so we have a normal trend up, bounce of the 0.5. Again, same thing here, bottom to top or from left to right, bounce of the 382 and move up. So a very strong initial move up, small retracement and continuation. Same thing goes here for move down. So again, we follow the trend or from left to right. So from the beginning of the move to the reversal point, we see retracement into our Fib level, continuation again, and again. So I hope that's somewhat clear on how to draw these Fibonacci levels now. So I do think it will be a good idea to look into some examples of trades that I took these past few days and weeks based on some type of Fibonacci retracement levels. Alright, so I would love to show these examples of the two Bitcoin trades that I took right here. So they're both a long trade on Bitcoin. So let's see here. First of all, I would like to make it clear that I don't just trade based on Fibonacci retracement levels. I use it as extra confluence. I do check them pretty often, but I will never or almost never take a trade purely or solely based on Fibonacci retracement levels. I always want another form of confluence. Just because it's not clear or not that clear if prices want to bounce off the 382, the 05, the 618 and so on. So we always want another form of confluence. At least I do. I know there will be other videos out there that will say 618, pretty clear, go long, no questions asked. That's not the way I personally like to trade. I need other confluences. I want to see markets react first. I want things to make sense before I enter my trade. And I will never, but I'll never just jump in a trade purely because it hit a level on the chart. There has to be something else behind it. Because you got to understand that Fibonacci retracements are a very, very commonly known tool under retail traders. So market makers and institutions will know this. They will mark prices down to, let's say, a 618 level, show some type of reaction, so retail is jumping in to then liquidate retail And once these liquidations happen, they will make the real move. So always, at least that's my advice, always look for another form of confluence on top of your Fibonacci retracement. That being said, let's have a look at this first Bitcoin trade here, so nearly a 3-hour trade, long setup. So, quick backstory, we have taken liquidity with vector candles, so this showed me its market maker activity. We see the move with the vectors, retail jumping in shorts. We are going to trap these retail traders, and from there we bounce, but we see the reaction after the liquidity has been taken. So we see the reaction. We take our Fibonacci tool right here. We draw it from our local low, so from left to right or from with the move. And what do we see here? If I zoom in a bit maybe, we see from our reaction up, we do have a small retracement into this golden pocket, so in the 618 to 65, and react pretty cleanly from it. So weak move up, finds the support in the 618 or 605, the golden zone. So from there, reaction up. I did see here my EMA crosses, and that was for me the other confluence I was looking for. I knew the liquidity was taken, I knew the shorts were trapped here, so I was looking for a long. We had the bounce of our Fib level, we had the EMA cross, from there we jumped up, I targeted this vector candle cluster right here, but that's not the point of the video. So from the reaction up, retracement in the golden zone, or golden pocket better, for 618 and 605, and we shoot up from there. So now for this second Bitcoin trade, it's pretty similar to this setup. So what do we see? We have this new formed liquidity zone, got taken out by the vector candle. We do get a reaction from it, or from there. Small retracement, so that's the zone of interest for us. So if we take our Fib tool again, from our local low, with a move to the high, or from left to right, what do we see here? Again, it's a weak move up. We find the support in the golden zone, or golden pocket, of our 618 to 65, and we see the reaction. Again, we have our EMA cross here. It was forming, so I jumped in the long trade, and we went from there. Just looking at it, this might have also been a Fib level. Let's see. So here we see another Fib formed, so again, touching our 618 and shooting up from there. But yeah, you can see the Fib retracements gives us some type of idea that we are forming some type of support, so, or a reaction zone, let's call it. So just judging of what we see or what else we see on this chart. So here, for example, this is more than likely also a Fib retracement. You can see our high in this case to our new formed low. The reaction, we do tap the 382. If we see some type of reaction, and they also try and take the 0.5, so it's not always the 618 you're looking for, of course. So that's important to understand. That's why I personally never trade purely based on the Fib levels, as you will never know which levels they will be taking. And it's also pretty possible that you will not have a reaction at all, so that they will just break through without notice. So it's not just because it hits a Fib level that prices will react, but again, they're a good extra confluence in your technical analysis. So these examples on Bitcoin were one way of looking at Fibonacci retracements, but you can also use Fibonacci retracements to look for TP targets, let's say. So an example for this is this trade on Cook USDT that I took. So here I based my TP target on Fibonacci retracement levels. But we will be going to the higher time frames for this. What can we see here on this Cook USDT chart? We had this extreme rally up. So if we take our Fibonacci retracement tool from the beginning of the move to the high, so from left to right, we also have our Fibonacci retracements right here. You could see here the levels didn't get respected. So here, if you looked for a long setup in our golden pocket zone, you would have gotten stopped out. So this is a clean example of why you need different confluences. And always keep an idea of the bigger picture. But I used this Fib retracement, I choose the 0.5 to have my TP zone reasoning. If we zoom out, this is also on a zone where they've previously found some resistance, so it's different forms of confluences. So previous resistance, we have our 50 EMA sitting there, the 0.5 Fib level. So different confluences for a TP as well. So your Fibonacci retracements can also be used as TP zones. It does not always have to be used for entries. I just wanted to show that as well, because most of the videos I see online are for entry-based Fib retracements, but I also use them for TP targets. So in this trade, we will see the whole move got recovered, which is kind of crazy, but okay, it's just an example. So I hope this was somewhat informative to you and it cleared up a little bit more of how I use the Fib retracements. As always, if there are any more questions, please feel free to ask them in the comment section or on the Discord server, and I'll see you guys in the next one. Take care and see ya. Bye bye.